Hi, thanks for joining me in today's video. My name is David and this is Critical Trading. In today's video, I'm going to share with you a very simple crypto breakout strategy that consists of two buy and sell rules and generates this equity curve that we can see on the screen. This strategy is so simple that it actually surprised me that it works so well when I came across it and started testing it. And the best thing about it is that you can take the strategy and write it in the form of a code, because this is an algorithmic trading strategy, and have the computer to trade it for you. So you don't actually have to do this manually. Now, if you are new to my channel, I create high quality content about algorithmic or systematic trading. Now, algorithmic and systematic trading strategies are the ones that you can actually write in the form of a code, and you can accurately backtest them on historical data, which gives you a lot of insight that you simply can't get when you are trading manually and when you can't really validate your strategies on historical data. So if you're looking for this kind of content, make sure to check out some of my other videos, check out some of my playlists as well, and don't forget to subscribe to my channel for more. Let's get to the strategy itself. This is the equity curve, like I said. As we can see, the equity curve definitely shows an edge. And what stands out at first is the fact that this strategy tends to be out of the market for prolonged periods of time. So what do I mean by that is that if you look at this area of the equity, we can see that it goes sideways, and that is actually a good thing. The reason for that is that during those times, the Bitcoin that this strategy trades went through some really rough times, and if you just held Bitcoin itself, you would need to endure a very significant drawdown, meaning open loss. So let's go through the rules of this simple crypto breakout strategy. Like I said, this is a breakout strategy, and so what that means is that the strategy buys the Bitcoin or buys any sort of instrument that it's applied on when the price breaks above a certain price high. That certain price high is visualized here on my chart by this dashed line here, and we can see that at this point here the price of the Bitcoin actually went above that line, and that means the valid breakout took place. More specifically, this is the 20-day highest high. Okay, and we can see when the breakout occurred, which is on the candle that I've got highlighted on my screen, that is a valid buy signal. So on that day, this system buys the Bitcoin, and it holds it until the price breaks below the 5-day lowest low. And that 5-day lowest low is visualized on my chart here with this dashed line, which is different color. And we can see that that took place on this day here, which is where we can see that the closing price of this day is below that line. So that is the signal to sell. And that is it. This is the strategy. You buy when the closing price of Bitcoin breaks above the 20-day highest high, and you hold the position until the closing price closes below the 5-day lowest low. And that is it. Very simple strategy. So let's have a look at the actual results. Like I said, this is a mechanical systematic strategy, and the huge benefit of that is that you can take these rules, write it in the form of a code, and apply those rules on historical data to see whether the strategy actually makes money historically. If it doesn't, then there's no point in trading it. And the underlying problem when it comes to many of these strategies that you can find online, on YouTube or whatever, is that they're so subjective that you can't actually validate whether they work, because you can't take the rules, you can't, explicitly write the rules in the form of a code, and you can't go and apply those rules on historical data, which is an extremely important thing. So basically kind of trading something, you actually don't know whether it works because you don't have that evidence when testing it on historical data, which is not the case of this strategy. So like I said, let's have a look at the results. And we can see that this strategy generated 65% average annual return historically. Now bear in mind that I tested from year 2014 up to now, so Feb 2022. And we only have about 40 trades because this is a longer term trend following / momentum type of systematic strategy. And what's important also is the risk associated with this. Risk associated with this strategy is expressed as a maximum system drawdown on this table that we're looking at here, and it comes at around 30%. 30% maximum drawdown is very, very high in my opinion. If you only traded this strategy on its own, I think very few people can actually endure drawdown of this size. However, if this strategy was a part of a more balanced portfolio, it would be a great addition. And I trade a similar strategy myself in my own portfolio. And if you just bought and hold the Bitcoin since 2014, you would actually get a slightly higher annual return. I think it would be around 75%. However, the maximum drawdown during that period would be about 80%, which is something that really no one could withstand. So there's always a profitability of a strategy and a risk associated with it as well that you absolutely have to look at. So if I just go back to the equity curves quickly, you can see what I mean by talking about the risk associated with buy and hold of Bitcoin. And we can see that clearly in this area on my equity curves here. And like I said in the beginning, you can see that the equity curve of the system, which is the green line, goes pretty much sideways during this prolonged period of time here. And that may initially seem like a bad thing, but in reality it isn't, because if we look at what the orange line is doing, which is the buy and hold of Bitcoin, we can see that there was a huge drawdown during this period of time. I think this was around 80%. And so it turns out that the fact that the strategy is sideways, i.e. it's not really holding any positions, is actually paying off in the long term. And that's it for today's video. Thanks very much for watching. I hope you enjoyed the video and managed to take away some actionable insight for your own trading and potentially start trading this strategy yourself. Like I said, if you're looking for more content like this, then make sure to subscribe to my channel so you never miss any videos going forward. Thanks very much. David at Critical Trading signing out.